10 questions to ask yourself when analyzing investment real estate. Number 1, is the property achieving market rent? Market rent is what the property should produce under normal market circumstances in its best possible condition. If it's not, that leads us to question number 2. What can be done to improve the rents for the property? There are a lot of different things to consider here. The most common is improving the level of finish of the unit. This could be paint, flooring, countertops, appliances, purely a case-by-case basis, but what can be done to recoup a return on investment? Number 3, how long am I willing to hold the property? Investing in real estate is great. It is a long-term return. If you are somebody that is used to the stock market or you like to play in day trading, you have got to throw those principles out the window when it comes to real estate. Having a plan for how long you are willing to hold and how long it makes sense has a major influence on what you should and shouldn't do with a real estate investment. Number 4, what is my purpose for investing? Another beautiful thing about real estate investments are all of the benefits that come with the property other than just owning it. Real estate has a monthly dividend in the form of profit over rental income. You see market appreciation year over year, and you also see the ability to improve the condition for a return on investment. Figuring out what your purposes are for those things and not even beginning to take into consideration the tax benefits of owning real estate are a very important question to ask yourself when you're looking for what to purchase. Number 5. Is the property performance consistent? One thing that you see a ton in real estate advertising, and I can't stand it, is you'll see property that is priced on its pro forma ability or a hypothetical situation where everything works out perfectly. Very rarely is the world perfect, and purchasing an investment priced where all things are hypothetically perfect is a great way to set yourself up for failure. Looking at the property performance across at least 2 years, ideally 3 to 5 if you have access to those financials. Are you seeing consistent growth? Are you seeing deferred maintenance? All things to look at when considering purchasing something. Number 6, is the property lacking any maintenance? This is a major thing. As the landlord, you are signing yourself up for all of the repairs. Making sure that you have a maintenance budget set aside, ideally a monthly contribution from your rental income to take care of those things. When you have tenants, you have appliances that fail, you have roofs that go bad, siding, windows, if you name it, they can break it. Number 7, how am I financing the property? This is a big deal. Many commercial real estate loans are on an ARM, which means adjustable rate. And during COVID, we saw rates were incredibly low, and we saw a lot of investments that would sell based off of those interest rates, and now we're starting to hit those adjustment periods. Understanding your exit, and if you are in an ARM loan, when that would adjust and what it can mean for your cash flow can make or break a real estate investment. Number 8, who will manage the property? Managing real estate is not for the weak of stomach. There are a lot of rough situations that can occur. You are on call. Yes, you can make more money if you manage it yourself, but if you are somebody who likes balance and not receiving calls at 3 o'clock in the morning because somebody doesn't have hot water, consider a property manager. But when it comes to analyzing the investment, what are the fees that property manager is going to take, and does the investment still make sense if managed by a third party? Number 9, how will I attract tenants? If you farm out your property management to another company, this may not be something that you have to worry about. But if you plan to self-manage, how are you going to attract tenants, especially in competitive rental markets? 10, am I satisfied with the cash flow? After all of your expenses, after setting aside a maintenance budget and an improvement budget, does the cash flow from the property make sense? Or should you consider something else? There are literally hundreds of questions that you should ask yourself when investing in real estate, but I would start with these 10 as a baseline when considering any investment.